The Reserve Bank of India may leave the key interest rate unchanged in its monetary policy review on Tuesday, as Governor Raghuram Rajan is likely to prefer containing stubborn inflation before conceding to demands for a rate cut to boost growth. Rajan had kept the policy rate unchanged at 8% at its April 1st review, as inflation, especially of food items, hovered at over 8%. Food inflation in April stood at 9.66% and retail inflation was at 8.59%. An emerging risk on the inflation front is the likelihood of a deficient monsoon, which could lead to a surge in food inflation and affect growth adversely. The Indian Meteorological Department has indicated a 60% probability of El Nino this year, along with a below-normal monsoon. The RBI has increased the key repo rate 3 times since Rajan took over as governor in September. Repo rate is the rate at which the RBI lends money to commercial banks, while reverse repo rate is the rate at which the RBI borrows money from commercial banks. Cash reserve ratio is the amount of funds that the banks have to keep with the RBI. After meeting new Finance Minister Arun Jaitley last week, Rajan said fighting price increases is a priority and the central bank has always maintained a balance between the need to check inflation and prop up growth. India's economic growth stayed below 5% for the second year in a row at 4.7% in 2013-14. Business Bureau, DD News.